This is our Forex blog for Wednesday, March 21st, 2012. And like we do most days, we want to buy the strong ones versus the weak and sell the weakest versus the strong. We statistically compare every currency to every other one using multiple different time frames, multiple different statistical tools, and then we average them together. With the dollar and the yen are the two major ones that people trade. If those are weak starting the day off, you want to focus on selling those. Underneath the real-time momentum, we have the daily, weekly, and monthly. And the real-time momentum is actually a tool that averages 5 of our best statistical tools together. 3 of the 5 measure direction, and 2 of the 5 measure the intensity of the direction. We give it about a 50-50 weighting for each of those two sides. So half of this reading measures the intensity. So if 100% of dollar pairs are falling, but they're not doing so with incredible intensity, or if they're falling with less volatility than they normally have for that time of the day, then you're going to see something maybe that looks like this, and it's not significant. Anything at and above the 80 level is significant. So that being said, let's scroll back these charts and take a look at the trades that this found today. Starting the day off, the pound was weak. However, the weekly monthly trend is one of the strongest. The CAD's also very strong, and it didn't have the weakness that the pound had. So certainly trading the CAD to the long side makes sense. The New Zealand's pretty much weak on all time frames, as is the Australian. It had a little bit of strength right here, but as soon as it started showing a lot of weakness right here, and it's confirmed right here when the previous intraday uptrend stopped. It didn't have that much intensity here, and it's very likely to resume its longer-term daily, weekly, monthly trend, which it did. So at 6 o'clock right here, you could be looking to sell the Australian CAD, or even sell the, buy the pound Australian. Let's take a look at those. These are currencies I don't typically leave up and running, so I'll have to type it in here. We'll start with the Australian CAD selling it, coming up to, I think it was 6 o'clock right here. Here's 6 o'clock. This one has a previous low right here. It's coming up to find the previous low, and you can see once it breaks that low, it's off to the races. It wasn't the biggest downtrend that you could ever see, but you can see the first fib target. It stalled. I would have got a half the trade there. More than likely, I would have got this with a very tiny profit. Let's see if the pound Australian went up more at 6. So here's 6 o'clock on this one. It went up from 51.20 all the way up to 51, almost 70. So it went up 50 pips. You never know which one of the currencies is going to have the momentum come back, in the strongest amount. You can see at 6 o'clock right here, the pound started to have quite a bit of strength until about 7:30. And of course, that's when this ended, and it got a little bit of a pullback. Anytime you see a currency make higher highs than before, usually that's a sign of strength, and it's a pretty safe idea to buy the next pullback, usually the 38 or 50% Fibonacci area. In this case, it came down to the 50. You buy right here. If you really want to make sure the noise in the market doesn't stop you out, you put it underneath, stop a few pips underneath the 62% fib, and you're good. You can see later today the dollar, even though the daily, weekly, monthly trend was down, had the most momentum to the upside. And then when it had almost no weakness here, even though the longer-term trends are down, that's a very good pattern. When you have extreme strength followed by almost no weakness, usually that momentum continues. You can see the same thing here. Strength, almost no weakness. Strength came back, almost no weakness. Strength came back. It happens all the time. Weakness, very little strength, the weakness comes back. And obviously when the momentum is in the direction of all the time frames, it's always a better trade. At 6 o'clock right here, the New Zealand was a great one to be trading against the pound. Pound New Zealand is obviously going to go up. You can see this one shot up about 50 or 60 pips, pulled back. You might have got out of this with a small win. When it breaks out over the high here, you get in, and you have your Fibonacci profit target already set. Somewhere between the first and second fib target is usually where it's going to end. And you can also use some of our other tools to predict likely profit target levels. Here's the slope. You draw that on here, and typically somewhere between these are separated into 4 quadrants. The lower quadrant, the mid one over the center line, and the upper one. Usually somewhere between, if you're buying the lower quadrant, usually the upper quadrant is a good place to get out of your trade. I don't show this in our blogs that much. Plus we also have the Andrews pitchfork. And most of the time, the Andrews pitchfork, if you see any kind of a move that's pretty steep like this, if you hold the shift key down and you click it, then it's basically a modified Andrews pitchfork. And notice how that nailed the high right here. Perfect, almost to the pip. It was slightly above the 1.382 fib target and the Andrews pitchfork as well. Excellent place to get out of that trade. If you had bought the pullback right here at the 38 to 50% level, let's just say here at 9,400, and you got out of it somewhere up here, you can see it went up 88 pips. Now 88 pips, that's more than a week's worth of minimum profit targets. Let me just go on a little tangent right here. Here's our trade analyzer planner. Let you analyze your trades. If you have, I'm not sure if I have, I think I don't use MetaTrader to trade with, but I think I exported one of our users' trades. And it shows you what the stats were, graphs out how much you made or lost in each trade and so forth. What I wanted to show you was, let's just say you have a $2,000 account. If you get 10 pips per day, 50 a week, 200 a month, your account pretty much doubles almost every 8 weeks. You can see 2,000, almost 4,000, and then it's more than doubled this time because we're basically incrementing this by, mini lots. Starts off, you trade 4 mini lots. But after 16 weeks, if your account grows like this, you're doing a tad under 2 lots, 1.7 lots. But you can see by the simple compounding effect, at the end of the year you have 258,000. But you're trading 51 full lots. That's like $510 a pip. But the point is, and a lot of people psychologically, by the way, can't trade that much. Most of the time I'm only trading 30, 35 lots maximum, and I usually scale into those positions. So, at some point, enough is enough. How much money do you need, and so forth. So let's get back to this. The dollar was showing a very high probability likelihood of continuing up, coming up to 630. Which one was the weakest one? Well, the New Zealand was extremely weak. So was the Australian. Those are the two weakest ones. So we're going to sell the Australian dollar and New Zealand dollar, coming up to around 630. This one was above the hourly moving average, the gray line in the middle. And usually when it comes down and finds support there, it's going to go back up again. When it doesn't, when it breaks down underneath the low right here, you'd actually, if you were watching this chart, you would have went short a little bit earlier right here. You can see the same pattern. Extreme weakness, almost no strength. And our lower containment bands are excellent places to get out of the trade with a profit target. You also can draw your fibs on here. And I always tend to exit half my trade when it hits the first fib target if it goes sideways like this. And then the trailing stop got hit a little bit after that. But it looks like you made about 15, 20 pips on that trade. Here's the New Zealand dollar. And you can see the same exact thing. Came down, found support at the hourly, came back up, hit the 10-day moving average from underneath, so it was resistance. Came back down and kind of went sideways for 15 minutes, so when it breaks down from there, you want to go short, 81.78 or so. You draw your fibs on there, and again, it hit the first fib target. Pretty good place to get out of the trade, 61. You be short of this, 78. You made 18 pips. Again, that's almost it's almost 2 days worth of minimum net profits just on that trade. Some other patterns you want to look for when you see a weak currency and it's just going sideways at the bottom, kind of like a little rectangle pattern. When they break through, and the minimum time frame is 30 minutes, I prefer an hour, hour and a half. It's about an hour and a half, it goes sideways. A tiny little rectangle pattern. Draw your fibs on this, and somewhere between the first and second fib target, you can see it tagged the 1.618 fib target, precisely. And that was the end of the move. It also was our trading zone, likely statistical support here, and you can see it stalled right at that 81.20 level. That's a 30 pip move right there. That's 3 days worth of minimum net profit on that one trade. Notice extreme weakness on the way down. The counter trend moves have very little strength, and those are very good signs of continuation trades.